Hi, this is Riley from LendCare. Did you know that every year over 2 million Canadians use payday loans to pay for things like bills? While a viable solution, it can often cause more harm than good. Here are a few reasons why a payday loan should never be anything other than a last resort.
Number 1. They're expensive. Payday lenders not only charge significantly higher rates of interest, up to 600%, but they don't report credit repayments back to the credit bureau, meaning that borrowers can't rebuild their credit scores by repaying their loans. A 2021 survey showed that 90% of respondents said they regretted taking out their original loan, with 80% left in a worse position than when they started. Number 2. Quick payback. Short-term loans usually require borrowers to pay back the balance within 14 to 30 days. It's a cycle of debt by the very nature of being high interest, extremely short-term, and having a single balloon payment structure. This results in individuals struggling to repay the loan amount and the interest within the allotted period. Why should you consider longer-term financing as a better alternative? Borrowers can secure far more money and spread their payback period, benefiting from a manageable repayment schedule with a fixed end date to the loan agreement, building credit in the process. Don't get trapped in a negative cycle. If you're one of the 43% of borrowers looking for funds to cover unexpected expenses like healthcare, auto repair, or pet care, even home improvement, LendCare offers flexible financing options worth exploring. For more information, visit our website today.